I want to start with a number that almost doesn't feel real. In the last 90 days, one single company made $58 billion in pure profit. Not revenue, profit. That works out to about $640 million a day, including weekends. The company is Nvidia, and it is now worth $5 trillion, the most valuable company in the history of the world. It is so dominant that it controls roughly 9 out of every 10 chips on the planet that train and run artificial intelligence. From the outside, it looks completely, permanently unstoppable. But behind closed doors, the richest companies on Earth, the ones writing Nvidia those giant checks, are quietly spending tens of billions to make sure this doesn't last. They are trying to dethrone their own most important supplier. This is the story of the most expensive war in business. Who's fighting it, who's secretly winning, and how you could actually invest in it. Let's get into it. First, you have to really understand the machine we're dealing with, because the dominance here is on a scale that's genuinely hard to picture. In just the last quarter, Nvidia did $81.5 billion in revenue. That's up 85% from the year before. Most giant companies would kill for 85% growth. Nvidia did it at an $80 billion scale. And almost all of it comes from one place, the data center. $75 billion in a single quarter, up 92%. To put that in perspective, that one division now earns more every 3 months than the entire company did in a whole year, just 2 years ago. Now here is the number that genuinely should not be possible in the hardware business. On every dollar Nvidia sells, it keeps about 75 cents in gross profit. That is a software company margin, on physical metal and silicon. Almost nobody in hardware has ever done that. That kind of money lets Nvidia do absurd things. Last quarter it announced an $80 billion buyback and raised its dividend 25 times over. It is a money printing machine that just keeps accelerating. And the man behind it, CEO Jensen Huang, isn't shy about what he thinks is happening. He calls it the largest infrastructure expansion in human history. And the spending backs him up. This year alone, just 4 companies, Microsoft, Amazon, Google, and Meta, will pour more than $700 billion into building AI infrastructure. That's up 77% in a single year, and a huge chunk of it lands directly in Nvidia's bank account. So Nvidia is winning the gold rush by selling the only shovels that work. The problem is, the people buying those shovels are some of the smartest, richest engineers on the planet, and they've started doing some math. Which brings us to the uncomfortable truth hiding inside that beautiful 75% margin. Because that margin isn't free money falling from the sky, it comes directly out of your pocket. Roughly speaking, a chip that cost Nvidia around $25 to build can sell to you for over $100. Inside Microsoft and Amazon, they have a name for that markup. They call it the Nvidia tax. And when you're spending $200 billion a year, a 75% markup isn't a rounding error. It's the difference between profit and loss. So the customers started asking a dangerous question. What if we just didn't pay it? There's another problem for Nvidia hiding in its own filings. Just 2 customers now make up 39% of its entire revenue. A year before, the top 2 were only about a quarter. The dependence is going the wrong way. Fast. And everybody in the industry knows who those 2 whales are. They are the hyperscalers. The same 4 companies spending the $700 billion. So Nvidia's biggest customers and its most dangerous future rivals are now the exact same people. It gets sharper. Nvidia's chips are so scarce that Huang himself admitted they are, quote, sold out, with supply tight for quarters. Meanwhile, training a single frontier AI model can now cost up to $500 million in raw compute. So put yourself in their shoes. You're paying a premium, you can't get enough supply, and you're handing your biggest competitor a fortune every quarter. At some point, the answer becomes obvious. Why pay the tax when you could just build the chip yourself? And that is exactly quietly what all 4 of them decided to do. Every single one of the big 4 now has its own custom AI chip. Google has the TPU, Amazon has Trainium, Microsoft has Maya, and Meta has MTIA. Billions of dollars of silicon designed in secret, aimed straight at Nvidia. Start with Google. Its newest chip, the TPU, called Ironwood, wires 9,200 chips together into a single giant machine. And it's not a science project. The AI lab Anthropic just committed to use up to 1 million of them. Then there's Amazon, and its pitch is the bluntest of all. CEO Andy Jassy told investors flat out what its Trainium chips do for the bottom line. And he's already proving it. Amazon now has more than 1 million of its own chips in production, and it built one of the largest AI supercomputers in the world, called Project Rainier, almost entirely out of its own silicon, to train Anthropic's models. Microsoft is in the game too, with a chip called Maya 200, built on a cutting-edge 3nm process packing 140 billion transistors, though Microsoft is careful to say it still buys plenty of Nvidia. For now, the goal is to dilute the tax, not escape it entirely. And Meta is shipping custom chips called MTIA at a brutal pace, a brand new accelerator roughly every 6 months, aimed at the billions of AI recommendations it serves every day. And here is the single chart that is keeping Nvidia investors up at night. This year, shipments of these custom chips are projected to grow almost 3 times faster than ordinary Nvidia-style GPUs. The line is bending in the customer's favor. And the savings on the ground are very real. One well-known AI company, Midjourney, reportedly slashed its monthly compute bill by roughly 65% after switching off Nvidia's chips and onto Google's. That's the kind of number that ends loyalty. So the revolt is real, it's funded, and it's accelerating. which raises the obvious question. If you wanted to profit from it, who do you actually bet on? And the answer is probably not who you think. Here's the twist that most retail investors completely miss. The smart money isn't betting on which giant wins the war. It's betting on the companies that arm both sides. Because here's a secret. Google, Amazon, and Meta don't actually design these chips entirely on their own. They hire two specialist companies that most people have never heard of, Broadcom and Marvell. Take Broadcom. Its AI chip business alone did almost $11 billion last quarter, up 143%. Next quarter it's guiding to $16 billion. It is quietly already a $1.8 trillion company. And Broadcom isn't slowing down. It's targeting over $100 billion in AI chip revenue by 2027, sitting on a backlog of $73 billion. It builds custom chips for around 6 elite customers, including Google, Meta, and the AI lab Anthropic. Then there's Marvell, and the best endorsement it ever got came from the one person you'd least expect, Nvidia's own CEO. At a keynote in Taipei, Jensen Huang walked on stage next to Marvell's boss and said 5 words. Marvell's stock jumped 32% in a single day on those 5 words, and its custom chip business is on track to pass $10 billion in revenue by 2029. Together, Broadcom and Marvell design an estimated 95% of all the custom AI chips in the world. But there's one more player, and it might be the safest bet of all, because no matter who designs the chip, Nvidia, Broadcom, or Marvell, almost all of them are physically manufactured in the exact same place, a single Taiwanese company called TSMC. TSMC makes roughly 68% of the world's most advanced chips. It is the ultimate picks and shovels play, and it's spending up to $56 billion this year just to build enough capacity to keep the whole AI boom supplied. So the picture is getting clearer. Whoever wins the chip war, the arms dealers in the factory get paid, but that assumes Nvidia actually loses ground, and that is a very big assumption. Because here's the thing everyone betting against Nvidia tends to forget. Its real moat was never just the chip. Start with software. Nvidia has spent almost 20 years building a platform called CUDA. More than 5 million developers now build on it, and most of the world's AI tools simply assume it by default. Custom chips have the silicon, but they don't have the software army. Second, networking. The hard part of AI isn't one chip. It's wiring tens of thousands of them together so they act like one giant brain, and that has quietly become a monster business for Nvidia. Its networking revenue grew 199% last quarter to almost $15 billion. And Jensen Huang's response to the whole custom chip threat? Pure, unbothered confidence. And he has the receipts. Nvidia says it already has a line of sight to $1 trillion in chip orders booked through 2027. On top of that, it now ships a brand new, faster chip architecture every single year, moving the finish line before custom chips can even catch up. But the moat does have one real crack, and it's not a competitor, it's politics. After new export limits, Nvidia booked exactly 0 data center revenue from China last quarter, down from billions the year before. A single government decision wiped out an entire market overnight. So the king is powerful but not invincible, which leaves you, the investor, with the only question that actually matters. So after all of that, there's the $5 trillion giant, the revolt, the arms dealer. Where does it leave the person actually trying to invest in this? Here's the part that surprises people. Even after a $5 trillion run, Nvidia trades at only about 22 times next year's earnings. For the most dominant company on Earth, that is not a crazy price. If, and only if, the AI boom keeps going. And really, there are 3 honest ways to bet on this war. 1, the king, Nvidia itself, if its software moat holds. 2, the arms dealers, Broadcom and Marvell, if custom chips keep winning. 3, the factory, TSMC, which gets paid no matter who comes out on top. Because here's what I keep coming back to. The real question was never whether AI is real or whether the spending is coming. $700 billion a year answers that. The only real question is who gets to keep the profit. And on that question, despite $5 trillion and 90% market share, the war is genuinely just beginning. If this finally made the AI chip wars make sense, do me a favor and follow Market Minute. Next time I'll break down exactly who's winning the next one. I'll see you there.